Hey guys, so today we'll be discussing another analytical tool in evaluating financial statements, and that is vertical or common size analysis. A vertical or a common size analysis is an analytical tool that determines the size or proportion of an item in the financial statements in relation to the total. The accounting period involved in vertical analysis is one or a single period only. So, for example, if you're going to analyze the cash and cash equivalent on December 31, 2017 using vertical analysis method, the amount of cash and cash equivalent on December 31, 2017 will be evaluated against the chosen base of the year 2017. Since as I said earlier, vertical analysis involves one single period only. The vertical analysis is very useful in determining the proportion of each item in the different sections of the financial statements. It will also guide the management people in their resource allocation policy. So, for example, if the business has set to maintain an average cash and cash equivalent to 4% of total assets based on its regular requirements and past year's experience. And then if the total assets of the business is 8 million pesos, then the expected amount of cash and cash equivalent at the end of the year will be more or less 320,000 pesos. So that is 8 million times 4%. So the vertical or common size analysis becomes more valuable if the common size financial statements of the entity are compared with the financial statements of other entities in the industry. It also determines whether the business is operating according to its nature. So, for example, a merchandising business is expected to allocate more of its resources to the inventory. However, if it is found out that in the vertical analysis that 60%, now it's more than 50, so it's majority of the funds or 60% of the funds or resources of the merchandising concerned business are in short-term investments, then it would be safe to assume that the business is not really a merchandising. Rather, it is engaged in buying and selling of securities. So that means that majority of its income is earned by the business in the buy and sell of short-term investments. So we have steps in vertical or common size analysis. So these are the guidelines that must be observed when preparing for the common size financial statements. So one, we have to convert the absolute peso amount of the items in the financial statements into percentage by dividing each item by the base. So the base shall be equal to 100%. Number two, use the following bases. So for statement of financial position, the base is the total assets. For statement of comprehensive income, the base would be the total or the net sales. And then for statement of cash flows, the base is the total cash available for use. And then step 3, make a conclusion on the allocation and indications of possibilities. So let's apply the steps in the series or in the following illustrations. So we have here illustration 9.1. So we have here the statement of financial position of Isay Company for year ended December 31, 2017. And in this problem, we are required to prepare a common size statement of financial position. So first things first, we have to convert the absolute peso amount of the items in the statement of financial position into percentage by dividing each item by the base. And since this is a statement of financial position, so the base is the total assets. which is 30,650,000. So this is 100%. So here's now the trend analysis of the statement of financial position. So this is now the vertical or common size analysis of the statement of financial position of Isay Company. So as I said earlier, the base is the total assets. So mo nang nalatay na siya 100%. Okay. So for current assets, let's have first the cash and cash equivalents nga 2,500,000. So we're going to divide it by the base, which is the total assets of 30,650,000. So the answer to that is 0.08156. So rounded to 0.0816. And then let's multiply that by 100 to get the percentage. So that's 8.16%. So that's it, 8.16%. Now for trading securities, we have 1 million divided by the base again, which is the total assets of 30,650,000. So the answer to that is 0.0326, and then multiplied by the 100 to get the percentage. So the answer to that is 3.26%. So we have 3.26% in the common size analysis. And then for trade and other receivables, we have 3 million pesos. And then divided by the base, the total assets of 30,650,000. So the answer to that is 0.0979. Then multiplied by 100 to get the percentage. So the answer is 9.79%. So we have here 9.79%. So same procedure shall be applied to all accounts in the statement of financial position. So kung giun sa pag-compute ang sa cash and cash equivalent, ang sa trading securities, ang sa trade and other receivables, maura sab ang pamaagi sa pag-compute sa inventories, sa prepaid expenses, total current assets, property, plant, and equipment down to the total liabilities and down to the stockholders' equity. Same ray ang computation na niya. Okay, so let's proceed to the next illustration. We have illustration 9.2. So this is the statement of comprehensive income for the year ending December 31, 2017 of Angel Company. And we are required to prepare a common size statement of comprehensive income. So since this is a statement of comprehensive income, so the base therefore is the net sales. So we have here the net sales 100%. Okay. So for cost of sales, we have 4,500,000. 4 million. So let's divide it with the base, which is the net sales of 7,500,000. So the answer to that is 0.5333, and then multiplied by 100 to get the percentage. So the answer to that is 53.33%. So we have here 53.33%. Next, we have gross income. So the gross income is 3,500,000, then divided by the base, which is the net sales revenue of 7,500,000. So the answer to that is 0.4667, and then multiplied by 100 to get a percentage. So that's 46.67%. So that's it, 46.67%. So same procedure shall be applied to the rest of the accounts here in the statement of comprehensive income. So same lang yun siya ang pag-compute. Kung yun sa pag-compute ang net sales revenue, ang cost of sales, and gross income, same way or same procedure will be applied to the selling expenses, admin expenses, total operating expenses, until the net income. So the base is still 7,500,000. Okay, so take note lang with the sales portion. So what if there is sales returns and allowances? So what will be the base? So for example, we have here the gross sales of 7,650,000, and then we have sales returns and allowances of 150,000. So therefore, the net sales is 7,500,000. So that is 7,650,000 less 150,000 in sales returns and allowances, and that's 7,500,000 net sales. So the base here is still the net sales. That is 100%. So therefore, the gross sales is equivalent to 102%. So that is 7,650,000 divided by 7,500,000. Then the answer to that will be multiplied by 100 to get the percentage, and that is 102%. Then the sales return and allowances is equivalent to 2%. So that is 150,000 divided by the base ng 7,500,000 net sales, and then multiplied by 100. So that is 2%. Okay, so 102% less 2%. So that's 100% net sales, which is the base. Next, we have here another prepare a common size statement of cash flows. So for statement of cash flows, the base is the total cash available for use. So the statement of cash flows has three activities. We have operating, investing, and financing. So therefore, the net cash inflow from these three activities will be the base. So therefore, we have three bases. So we have one base for the net cash flow provided by operating activities, and then we have a separate base for the net cash flow provided by the financing activities nga 2,600,000. So that is the base that is equivalent to 100%. And then we have another base, net cash flow used by investing activities. So that is equal to 100% in the vertical analysis. Okay, let's begin with the operating activities. So we have collections from customers, 4 million pesos. So let's divide it with the base, with the base, which is the net cash flow provided by operating activities, which is 2,550,000. So the answer to that is 1.5686, and then multiplied by 100. So that is equal to 156.86. So we have here 156.86 and the vertical analysis. Okay, so same computation will be applied to the rest of the accounts here in the operating activity. So same procedure lang siya. So take note with the base. Sa operating, ang ihang base is the 2,550,000. So let's proceed to financing. So we'll have the first account title, borrowings from the bank. So the borrowings from the bank is equal to 2,500,000. So the base for financing activities is 2,600,000. So let's divide the borrowings from the bank on 2,500,000 with the base nga 2,600,000. The net cash flow provided by financing activities. So the answer to that is 0.9615, and then multiply by 100 to get the percentage. So the answer to that is 96.15%. So you have here 96.15%. Okay, so same procedure will be done to the remaining accounts of net cash of the remaining accounts of the financing activities. But make sure that you're using the accurate base, which is the net cash flow provided by financing activities nga 2,600,000. So we'll now proceed to the investing activities. So we'll answer the first account. Proceeds from sale of machinery, that is 500,000 pesos. So take note that our base in investing activities is 3,100,000. So let's divide the proceeds from sale of machinery nga 500,000 by the base sa investing activities nga 3,100,000. So the answer to that is 0.1613, and then multiplied by 100 to get the percentage. So that is equal to 16.13%. So we have here 16.13 in the trend analysis. Okay, so same procedure will be applied to the rest of the accounts here in the investing activities. But note with the base. So the base for investing is the net cash flow used in investing activities, which is the 2,050,000. Which is the 3,100,000 pesos. So remember again, for cash flows, for statement of cash flows rather, so there are three bases. We have a separate base for operating activities, and then kana nga base operating activities mo na imong gamiton inig mag-compute ka for the accounts under operating activities. We have another base sa financing activities, which is mausad ang imong gamiton whenever you compute for the accounts under the investing activities. And then another base is ang net cash flow used in the investing activities. Investing activities. So whenever mag-compute ka og mga accounts under investing activities, so you have to use the net cash flow used by investing activities. And then kung balikon sa financing, so sa financing activities, you have also your base net cash flow provided by financing activities. So most of na yung gamitan whenever you compute for the accounts under financing activities. So thank you. So that's the end of the video. So thank you very much. I hope you learned something.